Good morning, good afternoon, everyone. Thank you for joining us today in our first summer edition of ARIVE Partner Spotlight. We promise to turn on the heat today. As a background, ARIVE Partner Spotlight is an educational webinar series that we recently started, where we bring in experts from ARIVE partner community to talk about topics that are relevant in today's market and that can help grow and scale your business. This webinar is being recorded, and the recording will be available on ARIVE's YouTube channel. It is also being live streamed on ARIVE Mortgage Brokers Facebook group. My name is Harish Tejwani. I'll be moderating this session today. Over past few months, we have covered topics like non-QM lending, interest rate buy-downs, how do you market and engage with real estate agents, contract processing, so on and so forth. And today, we are going to cover another important topic of how do we make government lending easy. I'm really excited to have a truly august and illustrious panel joining us today to talk about these government loans. In today's market, when volumes are low, interest rates are high, every loan counts, every borrower counts. So we are joined by Flagstar Bank today, who are true experts in government loans. They've been doing this for more than 35 years. And a shout out to them for being an early ARIVE partner. They partnered with ARIVE back in 2018 when ARIVE first launched, and they've been really patient with the first version of ARIVE, and over the last 2 years, our partnership has really grown. So I want to thank our panelists for joining us today. Before I hand it over to my colleague, Amy Hulett, who will be running this webinar, I talk to mortgage brokers on ARIVE all the time, every day, and I ask them, which ARIVE lender do you pick for which type of loans, and what makes them stand out? What I hear about Flagstar from ARIVE mortgage brokers all the time is there are a couple of points that make them stand out. First is stability. As a large financial institution, they are actually a bank that also do mortgage loans. Stability is really important in today's market. We have seen many large wholesale lenders exit the market from broker channel, correspondent channel. So being one of the largest bank lender gives them a lot of stability. The other thing I hear about Flagstar from our community is they're really tech forward thinking, tech focused lender. They give a lot of tools and technologies to their business partners. And they also partner with ARIVE, which makes sending loans to them through the platform much easier. The final comment I want to make is they have a truly diverse mix of products. They offer almost every product, HELOCs, government loans, conventional loans, everything that you may want as a mortgage broker, they have it. Not only that, their operational processes, what we hear is, are highly transparent and streamlined. Mortgage brokers have direct access to underwriters. They can call them if they have any questions. So they foster transparency, and that makes the loan process highly streamlined. And we'll hear a lot about that in this session. So with that, I'm going to turn over to our host, Amy Hulett. But before we do that, I have a quick survey for everyone. So if everyone can take 30 seconds of their time and respond to this survey, which is launching right now. So this is asking you, what is your expertise with government loans? Primarily FHA loans. So the first choice is, I currently do not do government loans, but would like to understand the opportunity, when to use them, how to use them. The second option is, I do them on and off. I do them occasionally, but want to do more of them. And the third option is, I'm an expert at government loans. I've read and digested entire 1,500 pages of FHA handbook, but I'm still curious to learn more. So please take a moment and respond to this poll that you do not do government loans today. you do them occasionally, or you're an expert at debt loans but want to learn more. All right, so looks like about 60% the responses are still coming in. I'll give maybe a few more seconds and then I'll end the poll. All right, I think almost everyone has responded. So let's look at the results. So the results are very interesting. About 62% of the audience says they do FHA loans occasionally, but want to do more. About 9% of the audience currently does not do FHA loans, but want to understand the opportunity, which is good. And more interestingly, about 30% of our audience are gurus in FHA handbooks. So again, kudos to you, but we appreciate everyone's time. Thank you for joining us. So Amy, do you want to take this on?
Absolutely. Thank you, Harish. That's interesting feedback. Thank you everyone for joining us. We have a really robust panel here. There is a lot of experience and tenure, and I would love for each of our panelists to just take a second, introduce yourself, your role, a little bit of background that you have in this industry so that our audience can really appreciate what you have to share with us for the next 45 minutes or so. So I would love if John, if you could kind of kick it off and tell us all about you and Flagstar.
Yeah, thanks, Amy. We'll keep it short, right? Appreciate you and Harish today, including Flagstar in this and thinking of us. We're excited to be here. So for those of you who don't know me, I'm John Gibson. I run national sales at Flagstar for the third-party origination channel. I've been here now going on 4 years, been in the industry for 28, and I would say of the 28, it was straight out of college. I'd say of the 28, I probably spent 1.5 years on the street, working with real estate agents, you name it, dealing with the borrower directly. I was a retail loan officer. And then for probably about the other 25.5 years, I've been in the third-party origination space my entire career, between being an account executive and then different roles in with the 2 or 3 companies that I've worked for. So that's me. I guess I would pass it to Rich next.
Sure. Thanks, John. So Rich Hoffman, Senior Vice President, Regional Director. I manage the Eastern United States. This is my 22nd year here at Flagstar and my 30th year in the industry, all on the TPO side of the house, third-party origination.
So I guess we'll go to Lisa next.
Yes, Lisa.
My name is Lisa Lacey. I've been with Flagstar for 23 years, going on 23 years, 30 years in the industry. Early in my career, I started off originating, processing, and underwriting some government loans. But the majority of my career has clearly been with Flagstar, supporting accounts like yourself and encouraging partners to embrace the government mission of home ownership and provide better access to credit for low to moderate households as well as minorities, while also protecting the government insurance fund.
Fantastic. Thank you, Lisa. Laurel, you're up.
There, I am Laurel LaFleur, and I'm going to sound a little old. I've got a little bit more time in the industry, but I did start right out of college like John and everybody else. I have been with Flagstar just over 16 years and 35 years in the industry. And I've done front end, back end regarding foreclosures, and learned early on that originations is where it's at. So I can easily say Flagstar is the greatest place I've ever been employed, hands down. And just our seasoned underwriters make it all worth being here and really a great place to come to work every day.
All right.
Awesome.
If anyone has any questions, this is a live webinar. There's a Q&A tab below. So please feel free to put your questions in there. We'll take them as they come. If anyone has any questions. Thank you.
Perfect. So I think we should just kind of kick this off and share with our audience really, what do we want them to know about Flagstar? What makes Flagstar unique? Obviously, you've been in the business a very long time, talking to Flagstar. But Rich and John, if you're able to kind of talk to our audience about the history of Flagstar, why that's important right now in this market with the experience that you all have and that Flagstar has, particularly with government lending. I think our audience would appreciate to understand that better.
Yeah, for sure. And Rich, we can kind of go back and forth on this. I'll throw kind of some thoughts that I have from like a 30,000 foot level, and then we can just go back and forth if you're good with that. So here's what I would tell you, right? And I think you heard it in the introductions. I would tell you first and foremost, one of the things that I think separates us or sets us apart in this industry is the tenure that we have with our employees at this company, right? You just heard Laurel and Lisa and Rich talk about, 16 years, 20 plus years with the organization. That permeates throughout the entire organization, right? That's not just a Laurel. If you look at our underwriters, if you look at like Lisa and her counterparts, just give you an example right there, like Lisa and the AEs, on average have been with Flagstar, somewhere in that 15 to 17 year range, some of them a lot longer. And some of them, just joining us recently as we continue to expand the sales force. So I would tell you first and foremost, that's one thing I think that I look at specifically with government, as well as just in general in doing business with a company, the tenure, the experience, the knowledge, not only internally, meaning Flagstar processes, procedures, our technology, but just the depth of knowledge that they bring to the business partner as the valuable resource for that business partner, I think is unrivaled in the industry. And then secondly, I know Rich can expand on this a little bit more. Like we've always been in TPO, right? The bank, from a third-party origination perspective, we're in multiple delivery types. We're the one institution that's really stayed in broker as a bank throughout all of the crises that we faced. And I would tell you, I think being a bank, I think Harish talked about this earlier, being a bank and what that brings to the table, being in this for over 30 plus years, seeing all of those ebbs and flows in the different marketplaces and the economic conditions, and being that financially secure, financially stable business partner that our partners can count on through the good times and the bad. Are really what brings that value to our business partner, because we've seen it, right? And when you look at the strength and stability of having a federally chartered, federally regulated bank as your business partner, there's a safety and soundness to that I don't think is talked about enough in the space, quite honestly. But that's what I would tell you from my perspective. Rich, what would you add?
Yeah, no, I think, you summed it up pretty well. I guess I would just add a piece as it relates to government lending, since that's the primary topic today. It's been one of the pillars of our company for over the 35 years that we've been in the space. I think it's a couple things. It's the combination of our dedication to that line of lending, which has never wavered. So we've been doing it for so long. We have a wealth of experience in doing it. But I think the third thing, and probably the most important thing, is the overall mindset and understanding of how government lending works. And that is a big deal. And the more government business that you do and you originate, and looking at the survey, many of you have done a lot of government business and have a lot of experience. I think you would admit that's true as well. So I think that's the most important thing as it relates to government lending, is really the mindset and understanding of how government lending works and how it's supposed to get done.
Thank you. Lisa, do you have anything to add from an AE's point of view? Why Flagstar? What makes you guys great at government lending?
Flagstar has multiple channel platforms. So we come across a number of different levels of training needs, whether it's learn the basics of FHA to wanting to become a DE underwriter. Flagstar has the ability to offer the tools and resources to get you to the next level and to show you some success. In addition to, as John and Rich talked about, the extensive background and experience level of the account executives and the tenure at the bank, they also have the ability we have additional resources such as online training. So perhaps it's the FHA or VA learn the basics or a loan delivery. The company supports the technology for that ongoing training. They come in live as well as recorded training sessions. We have a dedicated government help desk to help our brokers answer scenario questions, obtain greater clarification to underwriting guidelines. What we've talked about before, interpretation. As well, we have a wonderful sales support desk as well as an advocate team who can help facilitate whether it's technology questions or delivery questions. And they can also as well help facilitate underwriting questions. But to me, the most important and the biggest selling feature is the access to our underwriters. Our customers have direct access to the underwriting team on their specific loans. So if you're questioning a condition, or is there something better I can provide, or looking for options, our underwriters, like the Laurels of the world and managers, are available via email, via phone, whichever is easier for you as the customer. And they want to help you structure that loan because we all share the same goal of getting that loan to closing on time and making a happy homeowner. In addition, the seasoned account executives all have access and can provide guidance to the local markets, whether it be additional training facilities. I know here in Atlanta, I have a wonderful company that has done tremendous work with my accounts on continuing education and taken brokers all the way to delegated platforms. So we do work closely with them. As well, the government entities also provide additional training. They have FHA, VA, and USDA all have a tremendous amount of support online. Some, in fact, you can register and participate, and you can receive alerts and updates, but you can even participate on some of the calls, the industry calls, and provide your feedback. It's very important for the communication with Washington. One of the key things is FHA and USDA have recently been reaching out to all their top lenders and asking for guidance as well as feedback on how they can continue to grow and hit greater markets and expand home ownership for all. So it's nice to know that the communication is going back and forth. And I can assure you with Flagstar, that it's an ongoing conversation, which makes it nice because you're in the know, you're kept up to date, but not only is Flagstar up to date, we're sharing that with our customers.
Yes, I think the collaboration is key, right? You all have a lot of experience with that. So it's encouraging to hear that agencies are reaching out to partners and lenders like you to help broaden home ownership for more and kind of bridge the gap between what's really happening with homeowners and what they think they're helping with. You know, there's always room for improvement there. So
both ways, absolutely.
Yeah, absolutely. And I think important what you touched on is you all don't expect an originator to be an expert on government loans. It's really hard. I don't know that anyone can actually say they are. I mean, I know some loan officers will say, and that's great, claim a title, own it. You might be the expert by the end of that loan because you're going to find out the answers, right? But going in, I mean, these guidelines are always changing. It's very difficult for an originator to really stay on top of the latest and know all the things. And that's what makes having an experienced partner like you all so important, because that's your job, right? You're basically free assistance to them to be able to, you know, if you're approved partner with Flagstar, sounds like you can go right in and have access to all of these training tools online, which is huge, right? I mean, originators want to be able to learn on the go when they when they need it, right? They're not necessarily learning up on things before they need it. Some do, but I think it's more of like, okay, I'm in a market right now where maybe FHA is more, affordable. Maybe it's offering a lower payment for some borrowers right now. So let me learn up on it. Let me figure out what I need to know. And so it's encouraging that you all have such a great library of tools that they can kind of like a self-help, like learning center is what it sounds like, right? Can you kind of elaborate a little bit more on like where they find that, what that's like?
What I would encourage everyone to do is start with reaching out and contacting your local account executive. You know, if you're not already set up with Flagstar, I would direct you to tpo.flagstar.com, excuse me, and sign up with Flagstar. But let's get you engaged with the proper account executive and let them design and tailor a training platform that's conducive to your needs, what you need, where you want to go. From there, we can utilize the additional resources, but we have plenty of resources. Let us tailor it and meet your needs.
Wonderful. Okay, so the big topic here with government loans is obviously underwriting. I'd love to kind of talk about how Flagstar approaches underwriting of government loans. Government loans is such a vast topic. There's obviously USDA, VA, FHA. They are not the same at all. They're completely different, right? With their approaches, their underwriting philosophy. And so Flagstar, is going to have their own philosophy based on all these decades of experience of working with these agencies on what they really want to see in these loans for qualifying and how to help package these loans for insuring. So I'd love to hear more from Laurel on that with all of her decades of experience. You can just kind of touch on really everything Flagstar underwriting, philosophy, approaches, tips and tricks, all of that.
Excellent. And let me backtrack a little bit. I apologize. I failed to mention that I am a government underwriting manager. So as I was talking about our seasoned underwriters, we have many seasoned underwriters on each of our teams, and I am one of the government underwriting managers. So our philosophy, we provide sound underwriting from each of the guidelines, such as the 4000.1, supporting the government insurance fund. We try to use the common sense underwriting as much as possible, and we really provide consistency amongst the underwriters. I know a lot of times that is difficult, but we constantly coach and counsel and train the underwriters so that we are all doing it the same, so that as you're sending in loans, you're not going to worry about which underwriter you receive. We are providing all of that to the different, we really underwrite to the guidelines. We have very few overlays, very minimal overlays, and they are listed in our guidelines, very easy to follow, but we are down to just a few. So that makes it much easier that you can follow the guidelines posted, the 4000.1, the VA and the USDA. So it makes it nice and easy. We do allow the minimum FICO down to 580, which sets us apart from many lenders and we provide that for FHA, VA, and USDA. Many lenders out there are still at the minimum of 620 to 640. So we do believe that sets us apart. And we are willing to work with those challenged borrowers. We provide manual underwrites with non-traditional credit following the 4000.1 guidelines. And my biggest piece of advice is just write their story, provide the explanation coming in, and it makes a whole lot easier for the underwriter to provide that approval, and then we can condition for what will be needed for that. And also, if you're not sure about your borrower's ability to be approved, we offer an underwrite for it to be determined property, and that allows the borrower's purchasing power as they're talking to real estate agents. So that is really very helpful, and we will work with you through the whole life of the loan. We provide, as Lisa had mentioned, direct access to the underwriters, which I've been told many other lenders do not provide, but you can email them, you can talk to them on the phone many times. You just can't get across what you're looking for in an email. We ask any of our customers as well as our underwriters, it's a two-way conversation, and just to pick up the phone and discuss it. And that's why coming in, if there's something unique about the property or the borrower, tell us about it. But as the underwriter is looking at the file, if they have a question, they'll pick it up. They'll pick up the phone and call you so that they can get the whole story and hopefully provide that approval to you. We're looking for the win-win. We want to do whatever we can to help you. And in each case, we ask if you work with the underwriter, but if you have any questions at all, based on what they're advising, you're free to talk to a manager or team lead, and we'll explain it. We will provide whatever clarification we can, and all of the managers' phone numbers and names and phone numbers are on the underwriter's emails. So we encourage you to contact the managers if you have any questions at all. Wanted to provide some best practices. Yes. Thank you, Lisa.
Laurel, I was also going to add, we offer a lead generation program. So if you deliver a loan to Flagstar that we're currently servicing and we receive a trigger lead, or in our analysis, we've defined a net tangible benefit for that borrower to refinance, whether it be a lower interest rate or drop in the upfront MI, MIP, or so forth, we will bring those leads back to you. And we encourage you, obviously, to bring it back to Flagstar, but we want to create a win-win and put the borrower in the best possible position. With that, we are starting to see a number of cash out refinances. I know it sounds crazy with where interest rates are today, but we are seeing borrowers at an all-time high with credit, with debt. It's growing. Credit card interest rates are 20%, say. So even if your new interest rate on the home is, say, 8 or 9%, it's still better. And if you run the scenarios and the comparisons, you are truly providing a benefit to the borrower, putting them back in a fiscally more responsible situation. So just sorry to interrupt. Just wanted to add
No,
this.
you're good. Thank you.
Yeah. No, and Laura, I was going to tag in on something you were saying real quick, right? So as Laura was kind of going through, and Lisa did it as well, and Rich did with kind of the experience, because I do think that's key, right? It isn't like we just started doing government loans 5 years ago. We've been doing them for 30 plus years, and we've experienced kind of the evolution of what government lending looks like. But as Laura was going through that, right? If I'm an LO, I'm starting to think in my head, right? Like the credit box from an FHA perspective in being partnered with Flagstar is pretty expansive, right? If you look at it in comparison to maybe what we see in the norm for the market. But I just wanted to, I don't think you can go out without emphasizing it enough. And Laurel did it in a way which I hadn't even thought about before. So I want to highlight it. It's not only that our business partners have direct access to our underwriters, and just for everybody's knowledge, that's on any loan. That's not just government related. That's our philosophy, right? You are our business partner. We're here to bring value to what you do. We know that you have referral sources and borrowers. You know, if we can't solve it in like an email exchange real quick, Laurel will coach her underwriters to pick up the phone. The minute you get an email and you respond, and then there's more communication going back, pick up the phone. But Laurel's one point, I don't think we emphasize enough for the industry, which is we also don't wait for the business partner to call us or to reach out to us, right? Like if an underwriter's working on a transaction, since we're talking about FHA today, FHA transaction, and they're getting into it and something's not making sense to them. The idea around here is not to put it like into this status and then put it off on the side and then we'll wait for it to come back in. Laurel, as one of the managers, has trained, you know, over a long period of time, our underwriters to, hey, pick up the phone while you're in the file. Who else better to know about it than the person that referred it to us and submitted it to us? So the idea of that, and I think we were talking about this ahead of time before we, I think on one of our calls last week, there's this myth about government loans being difficult. I couldn't disagree with that anymore. I think they become difficult based off of how you, I think from the start, how you interact with the borrower, how you put the loan together, how you document what you need to document when you're before you submit it as the loan officer. But then I think it becomes difficult depending on the partner that you use when you're submitting that transaction, right? And look, there are a lot of we're not the only company that does government lending well. We're not the only one that does FHA well. There's a lot of people that do. But I do think we bring a unique, fresh, you know, experienced history over 30 plus years of how we do it. And if you do all those things and you align it, and then you have a partner like Flagstar that's as proactive as you are, you know, and as, you know, open book, accessible, because we know at the end of the day, we're in this together, right? If we're doing right by you, then the business partner is doing right by the borrower, by the referral relationship. And that cycle ends well with a homeowner either refinancing, to Lisa's point, pulling cash out, whatever the case may be today, or getting the keys to that house and moving in, right? So I kind of want to, you know, underscore Laurel's point again about just the access to the underwriters, not to mention, you know, the AEs as somebody like Lisa and others that we would talk about or could have had on this call, just understand it like the back of their hand, right? So when you partner that together, it makes for a winning combination.
Well, and John, I want to add too, to your point. I mean, loan officers need the least amount of friction on the loan. I think that's what we hear, right? Is like how easy just means least amount of friction. And from my experience, I just know that you don't want gatekeepers between the decision maker. The loan officers want to get to the one making the decision. If that underwriter is going to be the one suspending it or declining it or saying no to anything, they don't want to have barriers to that conversation, because they want to make sure that the file, the details, everything they know is being interpreted and heard and understood on the underwriting side, right? Because to your point, Laurel, dear underwriter letters are so huge. And the LOs that do a lot of government business or even conventional business, they know how to put a file together to tell the story, right? What do I need to understand to help want to approve this borrower? Don't make me fill in the gaps. Don't make me look for red flags. Tell me, what is this borrower's employment history, right? Tell me how they're moving up in their job. Tell me why they're, buying this home in now, or what this refinance is doing for them. So, I mean, having access, but just being proactive with those phone calls and allowing that conversation to be had is such a huge time saver. So it's the one thing I think LOs say the most. It's just like, I don't want to go back and forth in an email, or you're not getting it, or how can I get to the person, right? I'm losing hours, I'm losing days on this transaction, and that can kill a deal or kill a relationship. So being able to just save that time, pick up the phone is such a win-win for both Flagstar's team and developing their relationship with LOs, but also just for the LO and their entire business. So kudos.
Absolutely. Go ahead.
So John, I wanted to ask you a question on what you mentioned. There is a general, and this is for our business partners like loan officers, there's a general mindset, government loans, FHA loans, they are like tough loans. I don't want to deal with them. So how can our business partners use government loans as an advantage in their toolbox as they are trying to talk to real estate agents or other partners? Do you have any tips and tricks for our business partners so this becomes an advantage for them? And not this mindset of, oh my God, these loans are going to take forever to close. Any thoughts like how can our partners leverage them then run away from them?
Yeah, look, I would say I'd ask Lisa that question first off, right? Because she's dealing with her business partners constantly. So Lisa, when you're working with clients on hey, building referral sources, going out and bringing value to real estate agents, how do you kind of angle government lending into that conversation?
I think so much the agencies, the guidelines of the guidelines. Most people are very familiar with Fannie and Freddie. Okay, FHA, VA, USDA, it's nothing to be scared about. But honestly, it goes back to what Laurel said. It's common sense underwriting. It's going back to the old days. Paint the picture, right? Especially if you get into a VA transaction. I mean, VA's guidelines are very vague, and they're left to the underwriter to make good credit decisions. Again, when you're looking at FHA, VA, you're going off the spirit of the 4001 or VA's guidelines. They want to expand credit lending. If you can supply supporting documentation to support your story, you can most of the time get the loan. Whereas Fannie and Freddie is very clear, and there's not a lot of wiggle room. Whereas on government loans, you can continue to paint that picture and support it with documentation. As an example, actually, this goes into one of our next topics, is we recently had a loan. It was a VA loan, and the file had been turned down by another lender, and the originator reached out to us, and we spoke to underwriting, to Laurel's team, as well as to credit risk. And as they got some clarification from VA. Long and short, we had a doctor who had switched from W-2 to 1099 with less than 6 months history of 1099 income. I think we all know in this day and age, any guideline, any agency, that's not a credit-worthy loan at this time, because they want a history of the 1099 income, a minimum of 12 months. Nevertheless, some want the 2 years. But the underwriter looked at the file and took it to Laurel and her counterpart. And they said, listen, this guy's been a doctor for 14 years. He has an active medical license. He has a new employment contract. He can provide billing and gross receipts for the past 6 months. They reached out to VA, and VA thought, you know what? You have supported the story. You have a long history. You have a great credit worthy borrower. Let's do the loan. and we closed and insured that loan with no issues. But again, it was the team's ability to take the time and dig and look at what other options occurred out there. You couldn't have done that on an agency loan, but you can paint that picture with government loans.
And I was going to say, Harish, that in it is the nutshell, right? So if you're a loan officer and you're listening to this, how do I position that with a real estate agent? Listen to that scenario Lisa just told. That scenario, that person on a traditional agency loan probably isn't getting a loan, right? Let's just to be honest with it, right? With the way the guidelines are written, probably not getting a loan. But if you're an LO talking to a real estate agent and you start talking about the loans that, hey, here's what we've done in the government space, whether it be VA, USDA, or FHA. So guess what? When you're going across that borrower or that potential homeowner that, isn't black and white, isn't, somebody that's been working, for 30 years in the same job, here's the situation. This is what you can do with government lending. You can paint a picture, and then we can work to get that scenario and that picture, whether or not it's going to be something that we can do. That's expanding the base that a real estate agent can actually work with in selling a home, right? So you don't get that as much on the agency loan, government loan, everybody's going to write whatever they can, but there's a little bit more of a ability to kind of, you've heard, paint a picture, tell a story, right? So I think that's one way for sure, Harish.
Yeah, no, absolutely. I think this helps our partners. So, agency guidelines are kind of black and white, as we heard, but it's in the government lending side where we have more room for interpretation. I think for our partners, real estate agents, given it's going to be a purchase market for the foreseeable future, are super important. So trying to offer them, stories like, these types of clients, if you come across, don't decline them, send them my way. I can take care of them. It's a big win for our partners.
Yeah, and sometimes I'm sorry, Lisa, go ahead.
I just wanted to point out, don't forget too, I think people get this perception that government loans are only small loan sizes. On VA, we allow up to a $4 million loan at 100% loan to value with a 600 credit score. Tell me where else are you going to get that?
That's right.
Yeah. And this is the education for our partners, these borrowers are not locked out, there are options available. So educating your agents, if you have a high credit worthy borrower and, he's looking for buy an expensive house, jumbo, super jumbo loans, these options exist on the government side. On the agency side, they'll be locked out. They may have to go non-QM otherwise, but, 100% loan to value, that's something, you guys offer. So those are very, very valuable information for our business partners or your business partners that can share with their agent. We do have a lot of questions. Go ahead.
I was just going to ask about one of the topics Laurel brought up was TBD underwriting. Can you elaborate on, do you do TBD underwriting for all government loans? And are there any overlays to that, or, can you do it on manual? Do they have to have a certain minimum FICO?
No, just the FICO would be the 580 minimum for all of them. And we do offer it for FHA, VA, USDA, not really any limitations, but at least that borrower would know what they could be looking for out in the market.
And to clarify, we offer it on agency and jumbo loans as well. So it's across the board. Again, as Laurel mentioned earlier, it opens the borrower's purchasing power. Real estate agents love it because it's a firm approval, right? Mm-hmm. They've already supplied the documents and what have you. Their job is to then go locate a property within the criteria of their approval.
Okay, so TBDs are available on all the government products plus conventional jumbo, a lot more, but are they also, just to clarify, they're also available on manual underwrites too?
Yes, because the difference with the TBD is that there's just no property yet. So we're able to look at all the other aspects, the credit, the income, the assets, and tell them what, yes.
I bring that up because I think that's where so many LOs get really nervous. They have the manual underwrite and that doesn't mean anything to them, right? It means it's got to go to, yes, you can follow guidelines, but it really ultimately has got to go to an underwriter for that underwriter to then validate, just like any loan, right? Validate everything that's in there. But I think there's just less experience overall when it comes to manual underwriting and having that confidence with a lender. So I just wanted to highlight that on this session because I think that's a great there's not as many lenders out there, right, who are doing a manual TBD for government loans. So that's definitely something I wanted everyone to.
Where inventory is the way it is, and the majority of MSAs, right, having that in your back pocket is a big deal for sure.
Huge. Great. So I know we have a lot of questions, Harish, and I want to get to those too, but I did want to bring up, we had talked about, recent agency audits and what the feedback is from them on these government loans. Obviously, Fannie's doing it too. It's not just FHA, VA, or USDA, but if you guys can share any of these types of loans, what are you kind of getting pushback on, or little areas that you want originators to know that maybe in the past these things were not such a big deal because they weren't really looking them as closely, but now these seems to be these little areas that they're really honing in on, and it may change your underwriting approach. If you could share, Laurel and Lisa, that would be great.
So as I previously mentioned, Flagstar is in constant communication with Washington, whether it be FHA, VA, USDA. And we do this to ensure our interpretation and the implementation of all guidelines. As we know, the 4001 isn't necessarily crystal clear in every aspect of the guideline. Some of it, right, is because it's left to interpretation for the underwriter, but as well, some of it comes out of audits. Why were we audited by this? This was our interpretation. It also comes from default ratios and what's the word I'm looking for? We'll leave it at that. Anyways, with that, some of the recent audits that we've seen from FHA are because guidelines are not 100% to the T to the 4001. So Laurel's going to touch on a couple of those items, and then we'll go into VA and USDA.
And as she said, it strictly comes down straight to the guidelines, but one of the higher audit pieces is the gift letters and the transfer of funds, as well as just the income calculations for the self-employed. So HUD is zeroing in on all the supporting documents, making sure that we have absolutely every piece. As we know on the FHA, they still want the profit and loss. But all of those pieces are very important on every deal, and they're just really looking at every single piece of the guidelines. Undisclosed debt is another piece that's coming into play as borrowers are close to closing or have gone through closing. They're taking out that new debt that we have found will push the ratios over the allowable. So as well as go ahead.
That undisclosed debt is becoming a bigger issue. What's happening really is borrowers are disclosing credits being pulled, the loan is being underwritten, and they are taking the debt out prior to closing. And that's where, to Laurel's point, the loans are no longer qualifying. That is a big issue with HUD. So if lenders and brokers are not pulling soft pulls prior to closing, I encourage you to do so to protect yourself as well as the government insuring fund, because that's definitely affecting everyone in the industry on that.
Lisa, is it something that Flagstar does prior to funding, or is there any sort of credit refresh or internal policy on additional debt that may pop up, or is this something that really is just coming post-closing in these audits that you're asking originators to be proactive on and engaging with their clients?
We do today. We are not. These are coming up in post-closing audits, and it's being identified by the agencies, by FHA, when they pull. But again, we do encourage people to do it ahead of time, just to soft pull, just to be sure. And obviously ask the questions over and over again to the borrowers. Are you sure you haven't gone and purchased a new car this week? Because somehow they seem to be forgetting this sometimes. So it is very important.
Or if they sign their loan docs, right? And then they think they're done. And it's like, no, this loan is not recorded.
Encourage them to wait till after the loan is dispersed.
Right. We are looking at it though, Amy, from a standpoint of what Lisa just mentioned, and maybe putting something into our process that would monitor that. We actually recently had like 20 of our business partners into Michigan, actually last week. And that was a topic that came up around what we're seeing with undisclosed debt, employment, occupancy being one of them as well that we're seeing a lot of right now. And we got some good feedback that that is more of an industry standard, that they're used to seeing that from other lenders that they work with. So we kind of took that back and we're looking at it. But to Lisa's point, as of right now, it's still make sure you're advising them all along the way, right?
Yeah. And I think we touched on in our kind of prep call about not much auditing coming back from VA. And that just goes to the point of VA really entrusting that, these underwriters getting their certification, they have to go through, just like FHA, right? They have to go through so many different test files and have enough experience, but then they basically just have to be able to support why they wanted to lend to this veteran. And VA is a little more lenient when it comes to like saying yes, if it can make sense from a risk standpoint. And that's why those guides are such a gray area. And it's so important to have these experienced underwriters to have the confidence to be able to say, this is one I can, hang my hat on, and VA, I will stand behind it. Whereas some of the other agencies is like, there are guidelines, but then they have to get that assurance a little bit more. So maybe by directly calling agency or, getting more opinions of these experienced underwriters, right?
Correct. We are absolutely seeing that VA and USDA are giving minimal pushback with their audits. Again, they're just looking for some of the supporting documentation, LOXs from the borrowers, not to the same extent that FHA, Fannie, and Freddie are doing. And again, to your point, one of the many reasons why VA leaves those guidelines open for interpretation is they want the underwriters to make those common sense decisions. As long as you can support the documents, like the doctor who went from W-2 to 1099, they're going to work with you. They want to, again, encourage the homeownership.
Yeah, and Amy, what I would tell you too around this topic around kind of pushbacks and what we're seeing with undisclosed debt and some of the other things Laura was talking about, that's an industry-wide occurrence, right? This isn't a specific like Flagstar seeing it. We, like I think Lisa mentioned earlier, we try to keep our business partners involved and educated all along the way. So when we know and we start to experience it, we're educating our business partners like, hey, it's not just on non-performing loans anymore. We're seeing the pushback on performing loans, right? Which is a little bit different than what it may have looked like in the past. So it's an industry-wide thing. It's good to know if you're a loan officer, right? Because whoever you're doing business with is facing the same type of kind of feedback from the agencies in regards to audits and what they're seeing. So it's going to continue to be a stressor in the industry, and just knowing about it and then putting policies in place that you're addressing it certainly, helps that as you're doing business.
Right. And I think it adds to the perception that there's a tightening when there's different tightening of credit extension, but just from the underwriting side, it's sort of, it does seem to be industry wide from every lender we talk to, that it's like, well, we all do need to kind of be a little bit more careful, right? And the way that we're looking at these loans, and the volume is less, they have more time to do these audits, to go back and kind of see, what decisions were being made and if they were correct. And so that perception of it's tightening isn't really changing the guidelines per se at all, or making it harder. It's just being a little bit more careful going forward.
That's right.
So
Agree 100%. It's more being careful and dotting your I's and crossing your T's than it is tightening. I know from speaking to our government credit risk department, they do not want to add additional overlays as a whole. So going forward, at this point, there is no intention to do so. It doesn't mean we won't, right? Because I said as defaults come up and so forth, or audits, perhaps we've misinterpreted something, or perhaps maybe it's gift fund product. Something is driving and it becomes a common denominator in causing those defaults. That's where you'll see tightening, but overall, we're not seeing that yet, and we don't want to. We want to continue to make common sense loans and expand the home ownership.
So there are some questions, and on this topic, maybe John or Laurel or Lisa, anyone can chime in on the risk to a business partner if the loan funds, it records and there's a post-closing audit, and maybe it was a broker or a correspondent. Could you talk about, are there any risks to our partners? Like if a agency comes back and says, there was a undisclosed debt, or the employment was not correct, or the property type was primary residence, it's not being used. Do you see any risk on the business partner side, or it is primarily education? So John, do you want to touch on that? Like if our agency is asking you to buy back these loans, or it is primarily some kind of a warning, and are there any risks to a business partner? Let's say they were correspondent, or do you have any thoughts on that?
Yeah, look, I'll chime in, and then Rich, if you want to add anything to it from what you've experienced at the loan level, there is no warning, right? Let's just throw that out there for everybody. There isn't a warning that you will get from an agency that says, hey, we're seeing this and we're giving you a heads up. No, the heads up is, we're buying that loan back, right? Like that's where it becomes, now look, they're going to give us the information, we'll push back, right? And in a lot of instances, we're very successful in, we have the documentation in the file already. We're able to kind of, paint the picture to rebut what the issue is that was being brought to us on the repurchase. In the instances that we can't, then yeah, I mean, that's a buyback for the lender, in this case being Flagstar. And then I think there, it depends on what channel it came from, right? Correspondent versus broker. I think it depends on what the issue is, on what there would be any ramifications for the borrower. Obviously, we go down every path possible to not, necessarily have a buyback for our borrowers. But Rich, what would you add to that, if anything?
No, we take the ownership as far as the underwriting of the loan goes, right? Obviously, if somebody's doing their own underwriting, it's a different situation. But to go back to what you mentioned earlier, just in terms of the win rate, our win rate going back with the agencies on anything that they've come to us with audit-wise, last I saw is it's almost 80% that they're winning, 8 out of every 10 files. Obviously, that could change going forward depending on how picky they want to get. But we have an entire team that does that on a daily basis. They do a phenomenal job. So there might be an instance where we have to come back to the customer, the TPO, the originated loan, and say, hey, listen, guys, we know this was in the file, you documented it, but can you please get us this as well, because they're asking for this. And so we'll ask you for some additional documentation if necessary to help us combat that with whoever the agency was that sent it back.
All right.
I think it's also important to note that there is a difference between the repurchase demands from the agencies and FHA, VA, and USDA. Again, very minimal do we ever see with VA and USDA. With FHA, they're not asking us to repurchase the loan. The majority of the time, they're having us sign a 5 or a 7-year indem, or in some cases, an extreme error, maybe a 30-year indem, but it's not a flat out repurchase like Fannie and Freddie have us do. So
that's a good point.
And as well, yeah, we also don't want to pull those loans out of a Ginnie Mae pool. So it is very different with government lending than it is on the agency side.
All right. This is an interesting topic these days, with agencies having more time at hand. They are more closely, watching every file that funds and goes to them. There are a lot of questions on scenarios like, can Flagstar do this type of a loan, or, people on visas and, only having no visa but work permit. Maybe Lisa, do you want to talk about like the scenario desk we have if business partners are not clear, like, will this loan go through? Can you touch upon what?
Absolutely. Our government lending help desk can answer any of those scenarios via email or with a phone call, whichever is your preference. But absolutely, they will address anything, whether it be FHA, VA, USDA. Obviously, we'd look for specifics on which type of product you're looking for, as the guidelines might differ slightly.
Yeah, and you can also reach out to the portal as well to get your local AE. I mean, I can tell you the one thing that I would add from earlier is we lean on our AEs very hard, just as far as their product knowledge and the amount of training capability they have. They're completely a consultative approach. So to Lisa's point earlier about providing you and constructing a training that is exactly what you or your staff need, regardless of what your FHA level or government level of experience is, let us do that for you. Lean on us for that, because that's what we enjoy doing.
All right. And does Flagstar service all their loans in-house, or do you self-servicing? Anything you can talk about that for government loans?
Yeah, John, do you want,
I'll keep going, Rich. You've been quiet a little bit. I'll give you time to talk.
I know you guys we are retaining our government loans, so we are not selling. Same with agency.
And from a business partner perspective, is there any advantage to them? Like since you retain all the servicing in-house, it's about you give them the triggers back. Are there anything that might help them since you are servicing the loan?
Yeah, I mean, I think our servicing department, number one, does a phenomenal job. We've won, I don't know, 5 of the last 6 years, Fannie Agency Seller Servicer Awards. But I think the biggest thing for the originator is probably the trigger leads that Lisa talked about earlier. We do everything we can at the first that we know that a borrower might be interested to send that back to our business partner.
Yeah, I think we're also looking to expand that for our business partners, right, and add even more value to it. So I can tell you when we were in headquarters last week, we met with the head of servicing, and there was some interesting conversation around a future state of what things could look like for our business partners with some branded marketing, things like that in regards to servicing statements and things like that. So all in the infancy stage. But yeah, to your point, Harish, because we're servicing, we can look at doing stuff like that.
All right. I think there are some questions on DPA, down payment assistance programs with FHA. Anyone would like to chime in if you guys offer that, and how does that work?
We do
And
offer
we have
that.
some-
Oh, go ahead.
Go ahead,
No,
Lou.
go ahead, Rich. You're good.
No, you go first and I'll chime in afterwards.
We do offer it, and we have a department that handles all of that. So if we aren't currently working with that agency, they can get signed up through Flagstar, but we welcome many of those DPAs. But I know Rich can probably provide more
Yeah, no,
detail.
that's exactly what I was going to say. And there's literally thousands of them, right? So depending, every MSA, county, municipality has, tens upon tens of DPA programs that may be available. So the best thing to do is we can gather the information for that particular DPA. We send it into our product team, they review it, and then we will absolutely, if we approve it, which we typically do, and we'll go ahead and add it to our list, so it'll stay on there, and then they can go ahead and originate loans going forward for that particular DPA.
You guys maintain a pretty robust list for DPAs, right? I've seen that from Flagstar AE before. It's sort of like
Yes.
every city, every state. There's a lot out there that I think LOs don't know about. So it's a great resource to kind of get signed up with you guys and be able to see that list, see what's in your market.
We
what you
can
might
share
have.
that list. At that point, when they're approved, we can actually get you that list. And then to your point, Amy, it grows daily. There literally are thousands of them nationwide. So yeah, it's constantly evolving is what I would say.
Awesome.
All right, Amy, anything else we had? We still have many questions, but we are on the top of the hour. So I want to.
Yeah, I think we covered, all the main topics. I think we were just kind of going through these last little questions, a lot of interest in, I think, sort of these nuances of government. Do you do these types of FICOs and manual underwrite and TBD, all the things we wanted to talk about, our audience is definitely interested in. So I would say definitely reach out to Flagstar. You can get approved within ARIVE up at Integrated Lenders. If you're not already, you can get signed up, reach out to your AE, right? To ask these questions of minimum FICOs. Can you do this type of borrower? Guideline questions. They're the first line of expertise to be able to help you filter through and how to put this loan together. And then obviously there's a ton of information on your website and portal for training tools and scenario desks and TBDs and all of that. So thank you all so much for sharing everything today.
And Laurel, do you offer VA one-time close? Is that something you guys offer? Maybe Lisa, if you know that at this point. No.
We do not today, but I keep asking for it.
She very much beats that drum for us to put that out there. It is on the list of product enhancements for sure.
All right, I think we have answered almost all the questions, and if anyone has more questions left, they can reach out to us. We can help them get them answered to our ARIVE team. And if you want to sign up for Flagstar, again, Lisa, how do they sign up if they want to? Could you repeat that before we?
TPO.flagstar.com.
So if anyone here is not signed up, they're an integrated partner in ARIVE. Once you sign up, you can do that through ARIVE as well. There's a little widget that will guide you through the registration process, like sign up process. And then you can see their pricing live, both on the non-Dell and broker channel, as well as you can submit loans to them electronically. With that, I want to thank our panelists. We really appreciate Flagstar team for taking time to do this for our broker partners. It was so nice having you, all of you. And the recording will be available on our YouTube channel in a couple of days. With this, thank you, everyone. Have a great rest of your day. Thank you.
Thank you.
Thank you.
Thank you.
Thank you.